Excuse me. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me this morning. Let's get started. Today is Friday, May 6th, 9:01 Eastern Standard Time. Thank you so much for joining me today. If you like these videos, make sure to hit the like button, subscribe to our channel. Really do appreciate it as always. Turn on notifications so you don't miss anything. Happy Friday. Happy pre-weekend. Let's rock and roll. The Dow is down 177 post NFP number. NFP is the non-farm payroll report. Let me go ahead and read that to you. I did retweet it. Let's go over that number, and we can have a little bit of a backdrop. The U.S. labor April non-farm payroll report. Remember, this is revised every the month after. I haven't seen revisions for March yet. U.S. April unemployment rate 3.6%, still historically low. Consensus of 3.5%. April average hourly earnings up 0.31% or up 10 cents. 31.85 an hour over year, 5.46, still slightly below inflation data. Again, based on year-over-year CPI growth, about 1% less. Taking a look here, again, 428,000 jobs added. Let's take a look at this chart here. This is the U.S. unemployment rate remains at 3.6%, the lowest level since the start of the pandemic, only 0.1% above the 50-year low we saw in February 2020. So again, we went as high as 14.7 and came back down to 3.6. 3.5 is pretty much your baseline. Since 1969, we had a 3.4% rate, and then in 53, we had a 2.5% rate. Now again, I'm all about people working, but again, that's inflationary. So more people working, it's harder to fill those jobs. You have to pay higher wages to fill those jobs. More people are quitting, so looking for greener pastures, let's just say. That's really the difference maker. Again, I hate to be that guy, but again, if you want inflation to slow down, we need either one or two things to happen. We need supply to come and reach demand, or we need a slow demand. And the Fed right now obviously is saying we can't control supply. We're going to go ahead and kill demand by raising rates, making money more scarce, harder to get, meaning capital, less liquidity. Liquidity is available, but just at a higher price. And then again, less demand will bring in less prices, which will help bring down inflation. So the key we're looking for the next month or so for the next Fed meeting or the CPIs is that did we hit peak inflation? Can inflation at least slow down? Not saying kill inflation, but can we slow it down? That's really the key. All right, let's take a look at some macro this morning. The VIX is up 5.64%, 32.96. The dollar index down 0.21%. Keep an eye on that. Yields continuing to go higher, guys. Been saying it. 3.125. If you've been following us on the blog on Discord, go to the maximum time frame on the weekly, and you can see where we are right near that resistance level of 32.48. We should break 31.25 probably within a couple of minutes. So again, that's going to put pressure on equities, meaning stocks. Dow's down 180 points, NASDAQ down 123, S&P down 28, Russell down 10. Sweet crude oil up 1% per barrel. Gasoline futures up 1%. $33.69. Gold is up 0.14%, $18.78 an ounce. $22.41 for silver futures, down 0.12%. Euro dollar is up 16 pips, 105.57. The dollar index is up 40 pips. Dollar yen, 130.62. Bitcoin futures are down 1.5%, pretty much in line with NASDAQ. Again, you could just keep an eye on NASDAQ. That'll give you the Bitcoin movement. They're kind of working together. 35,700 for the future side. Ethereum 26.75, down 2%. Really what I have done lately, again, nothing has changed. Again, I'm still waiting for that 40-20 SPX gap fill. If you guys remember, I did put that information down. You could see it right there. That's my target, 40.19. More likely we'll probably get 100 or 100 or so handles around that level, but that seems to be the right level for me in order to buy more. I did buy some more SPY-G yesterday. And I did buy some more crypto, not tons. I do it every week, so it's not like nothing new that came in. But 40.19, that's where I'm going to start looking at probably adding a little more risk onto the table, buying some stocks. Let's see what we get. Let's go and take a look at S&P. Let's go and take a look at SPY. That's a lot easier. Everyone always asks me about SPY. Let's kind of bring it down to this week again. We're back to pretty much levels that we haven't seen since Monday. So all this was just we're back to Monday at noon. So again, what does that mean? Again, now we're starting to see a little bit of a pattern. Take a look at this. We're going to go to and draw a couple circles. So here's your left shoulder, here's your right shoulder. I figured that we would go a little bit higher to 40, 41, 415.05, and then we create that right shoulder. Here's your head, again, kind of a narrow head, obviously, and you can see this is usually a bearish scenario here. Last time we've had this on the hourly, or I can bring it on the daily, that we had that right head and shoulder. This was an inverse head and shoulders, but we still came down. Last time we had an actual head and shoulders formation on the hourly. I have to take a look. I don't see another one lately, other than, not really, but really this is your only head and shoulder formation that you have right now on the hourly. Again, we could go down. Again, the question is, do we get to the low of 406.42? And if that's the case, that'll make new lows, at least on the candle settlement level. So looking at futures, you're starting to see a little pressure, and the reason that you're getting it is because of yields right now. The 10-year yield, you have to reprice the market based on higher rates. When rates are lower, of course, that makes money cheaper, and again, boosts EPS. Doesn't mean that companies are not making money. There's some great quarters out there. AMD had an excellent quarter, obviously. Some great companies out there that make good money. Microsoft, Apple, obviously. There's some other ones out there that I can't think of at the top of my head. For example, Booking.com had a great quarter too. So again, there is some gems out there. Not everything is just the NASDAQ either. But you could see, again, possibility of a head and shoulders formation coming up on SPY. What does that mean? We'd be getting a little lower to 406.43. That's your support. Again, we need yields to come back a little bit. I would like yields to get below 3. Again, that's going to be a little bit, but right now the 10-year bond market is definitely very volatile. So again, that adds more pressure to the downside. Let's see what we get. Yesterday was rocking and rolling. We had a really busy day yesterday. Let's see if we can continue it further. Good morning, everybody. Jorge says, good morning, Carlos. Are we in a bear market? How much lower can we go? We are not in a bear market officially yet. On S&P, NASDAQ, we are. Remember, that's 20% off peak to trough. We're right around 15, I want to say. But again, on the daily, it's very important. I think we get to now, I think I've said it now for a couple of weeks, is 40.19. That's the lowest, and I can't say the lowest level. Remember, support is like a mattress. Again, it can sink in and still bounce. It's not a plywood board. It's not concrete. Again, that's my support. That's your gap fill. You can see it right there, 40.19. Could we get to right here, that 100-day, 39.57? Sure, let's go ahead and give it a couple of points away, 60 points here and there. We'll kind of get to the 100-day moving average. Actually, no, excuse me. We're gonna have to expand that out here. We'd get to right here, 40.22. Again, I'll probably give it a couple of points, maybe get to 39.83, 3900 or so, and then I expect this to bounce. But yeah, I don't think we get down to pre-pandemic levels of the S&P. You don't infuse $7 trillion worth of liquidity to get back to unchanged. That doesn't work that way, in my opinion. I don't think so. What are investors assessing right now? So the major thing investors are assessing now is, I'm not going to invest in your company unless you're making good money. Again, my money now, in terms of dollars, is becoming more scarce. You could see in the DXY, it's becoming more valuable. So again, you're going to be a little more protective of what you're going to invest in, because dollars are a little more scarce as rates have increased. So again, you're going to be a little more picky on the companies that you want to buy. More people are not going to buy unprofitable companies. So the unprofitable companies, the high betas, the ones with negative EPS, they're the ones that are going to come back down. Again, I expect high mega cap names with great balance sheets, Microsoft, Google, and Apple, to bounce because they have the money. They make profit. So it's not like they should get punished. The problem is that they're lumped in with the S&P 500 futures contracts. Again, those moved all together since they're a big part and a big weight. But again, if you look at this, this is the SPX. Look at the RSP, which is the equal weight ETF. Not much going on. That's equal weight. That means that all 500 stocks are equally weighted, equally counted, unlike this, where that right there is including tech being weighted higher than any other sector. When I see something interesting, SPY-G is a growth ETF. That's the one I have. Again, it's more for growth names. But I've been saying this one for a little bit. SPY-D is actually green for the year. Actually green for you. This is the dividend portfolio. So again, a higher rate environment gives more attractiveness to the companies that provide dividends. So again, valued companies, the commodities and dividends are going to be rotated in, again, in a higher rate environment. I hate to say high rate environment because we're nowhere near that. We're still in a low rate environment. We are in a higher rate environment than we're used to. Remember, we're at levels in terms of the 10-year not seen really, or mortgages not seen since 2009. And in terms of actual yield, was the last time we've had yields this high in the 10-year, we really have to go back to around 2018. So again, we're just retracing back to 2018, about 4 years ago. So again, tons of stuff is happening. Remember, the Fed was raising in 2018 too, and we had a flash crash, if you guys remember. Remember, this was SPY in 2018. And again, we recovered. So again, I'm not really worried, just more of that investors are just repricing. Again, it's all about what are you willing to pay for? Again, it's available out there. If you want to buy more stocks, go for it. But you could see here, this is what your 2018 flush right here to right here. I'd have to get the exact measurements on exactly how much in terms of price did that happen. But guys, you have these falls and then they get bought. So again, I think we're closer to the bottom than just getting started. So again, that's where you start working on your sheet or your kind of like your wish list. Again, pretend like you're about to walk into the Black Friday shopping at Best Buy. What TV do I want? What is this? Again, that's what I'm going to do. What you do, guys, that's really up to you. But again, if you're the type of person that just wants to take off some risk off the table, I can't handle this, driving me nuts, you can start selling a couple of things, start raising some cash. That's okay. If you're the type of person where, Carlos, I don't give a damn, I'm not retiring tomorrow, let it ride, then all this is a moot point. And pretty much you're just watching because you're a trader or because you're just interested in market mechanics. All right, good morning. Am I buying any more Coin or Zoom here? I'm not buying any other stocks until we get to that 4,000 level. That's the gap fill on SPX, 4,040. That's where I'm going to really start buying some more. But right now, no, because we're probably going to get there anyway. So it's no point of buying here. I think I can get a lower price. So I kind of think of stocks going to the car dealership, for example, or a house. Again, I'm looking around the neighborhood. Hey, what has a good price? I don't want to buy a house that's above list, even though I kind of had to 2 years ago. But hey, it was worth it. It was worth it. I had to put that bid in. Given that yields are up, how does investors look at companies like Amazon, Apple, Microsoft? The problem with Amazon, in my opinion, and what's been hurting, is that Amazon is very difficult to price. Again, they are a logistical company. They are a consumer discretionary, meaning shopping. And they're also a tech company. So how do you price them? AWS is great. Do you value them as a tech company like Microsoft or Salesforce.com? That's a higher multiple. So again, right now, Amazon technically, just based on AWS, would be cheap. But if you put us in the box of consumer discretionary, now you're starting to get above. Now you're getting a little expensive relative to like a Costco, a Nike, and Starbucks, the other discretionary names. Okay, let's go ahead and see if we can make them a logistical company, FedEx or UPS. They're really expensive. They don't even pay a dividend. So it's kind of hard to put a box on what Amazon really is and how to price it. The way I look at it, I really do see it not even as a consumer discretionary. I see a consumer staple that is a tech company. That's how I looked at with Tesla. Tesla to me is not a car company. Tesla's a tech company like a Google, like an Apple, that just makes cars. Now that's a bulk of their revenue. But would you call Apple a phone company, even though the bulk of their revenue comes from phones? No, they're a tech company, and that's how they should be priced. But a lot of people, when iPhone was coming out, were worried about how do we price Apple. Apple had a little bit of a wash period for a little bit. Remember, it wasn't always the belle of the dance. They weren't the best stock around. When the iPhone came out, the iPad, and more technology and more innovation came out, sure. But when the iPhone came out, and when Steve Jobs wanted to kind of make the ecosystem surrounded by Apple, which was brilliant, by the way, investors on Wall Street were like, well, how the hell do we price you now? Are you a computer company or a phone company? And again, iPhone kept being built into the point like being bought. And then you look at Apple itself, you're saying, no, who gives a damn what they are? Forget labels. They make money. So again, the issue is, how do we price in these companies? What do they do? How do we price them compared to their peers? The problem is that a lot of these companies are so large. They have so many sources of revenue, good thing. But again, how do we box them? So again, I think Wall Street is looking at how do we price these companies moving forward, especially in a high rate environment. I have no qualms owning Google in a high rate environment, Apple or Microsoft. They're not rate sensitive. They're dollar sensitive, but they're not rate sensitive. Again, banks rate sensitive. Higher, they usually do better. Again, consumer discretionary in a higher rate environment. Discretionary meaning you don't have to buy. Starbucks is going to take a little bit of pressure. Nike's going to take a little pressure. I love Nike and Starbucks. I own both. Tesla's probably going to take a little bit of pressure, even though there's Shanghai factories online. So again, you have to kind of look at it in the sense of you have money in your hand. and you're going to each booth. Imagine it's a job fair, and each booth has their own stock, and they're saying, hey, buy me, buy me. That's what they're doing. The market is literally telling you every day on your screen, here, buy me if you want, or you can sell me if you want. And then it's your decision to say, okay, which one, where am I going? And that's kind of the trick, right? If you're a stock picker, which is the best to go? But at the end of the day, you want to stick to companies that A, you understand, an industry that you understand, and a company and management that you actually trust and actually, over the test of time, has given back value to shareholders. If you just want to be part of the name, that's fine too. You can always do that. I mean, if that's your thing, there's some that love Under Armour clothing, so they buy Under Armour stock. I'm a big Nike fan, so again, that's really the reason I wanted to own stock. Every time I buy shoes, I buy a little bit more of Nike just to kind of match myself in my mind of like, okay, I bought some sneakers, let me buy some Nike. I haven't added any Nike lately because of the market environment and then the China stuff. Once China's back online, Nike's going to bounce back too. So again, it's a smorgasbord, big word, of so many things going on. Again, you have Russia, Ukraine, you have the Fed, and of course, you have COVID in China. So it's a lot of stuff going on, again, supply issues. So it's a lot we have to work with as traders and investors. But again, I still think that gap fill is the way to go. I think it'll give you about 18 times or 17 times EPS, market multiple on the S&P, which historically is not terrible. I read yesterday that I believe that's 17 times forward earnings. Based on current earnings, 17 times will get you around 3,700 S&P. I don't think we get there, but again, I think forward S&P, forward earnings, I like to look at forward, 17 times is a pretty decent multiple from where we came from. At one point, I think we were at 29, 28. So again, it's gotten cheaper. It's gotten cheaper because at least earnings are pretty much flat on the big boys. Our earnings are great. At least 80% of the S&P has reported, and it has EPS growth. So if you've missed earnings, you're going to get nuked. If you beat earnings, you're going to get rewarded, and then it's going to sell off with the entire market because it's all lumped in together. AMD had a great quarter, but it's lumped into the NASDAQ, it's lumped into the Qs, and it's lumped into semiconductors. So again, that's going to affect it. So you got to understand, like, for example, a company like Tesla that is so powerful, not in terms of market cap. There's so much derivatives and so much equity tied in the stock market to Tesla. Tesla is going to become pretty soon, and it's getting kind of scary, almost too big to fail, if you have to think about it. Let's see. Morning, Carlos. Could you tell me the relation of TNX and stocks? Yes. So again, TNX is just the 10-year yield. Again, the higher it goes, again, that makes it more expensive to borrow money. If you want to take a look at the 30-year mortgage now at 5.5%, I locked in mine at 2.8%. That was just last August. That wasn't exactly too far ago. So again, this volatility in the bond market is not healthy. It's not even usual. So again, what we're getting is a flood of supply from the unwinding of the balance sheet from Jay Powell. No buyers, obviously not enough buyers, obviously a lot of sellers. And then of course you have Japan as well, who are the largest foreign holders of treasuries, pretty much dumping their positions because they know inflation's higher, rates are going to go higher. Why would I want to own a 10-year yield that's paying 2% when I can get one now that's paying 3.1%? So and the bond values fall inversely with bond yields. So again, if bond yields are rising, bond prices are sinking. So you can see here with TLT, right? The issue is, why would you want to keep holding bonds if they keep falling in value if you're a fixed income investor? If you're owning bonds, it's because you want no volatility. You want, a couple of pennies here and there, up and down, no big deal. You just want your yield, you want stability. This doesn't scream anything about stability. And that's what's making bonds less and less attractive. Here you go. This is high yield credit. This is high yield credit. This is junk bonds, right? Look at that. Let's take a look at LQD. This is investment grade. Microsoft, J&J, Apple. These are, imagine this is a 800 FICO score, and look how much the bonds have fallen. You do not get this kind of bond movement usually in the market. It is not a good look. Investors are factoring recession of 23. If you base a recession on a signal of the 2s and 10 spread, the inversion of the yield curve, we're probably at a less than 4% chance of a recession, just based on that. I just think that we kind of get that panic mode of recession when we're not there. We kind of set up our funeral before we die, which I kind of get, but I know it's kind of painful. This is really just a drawdown. I don't see it as a recession. I mean, you don't have that many jobs that have been filled and that low of an unemployment with a recession. Do I think we're slowing down? Obviously, that's easy to see. But a recession, a full-blown grind-hauled recession, Maybe the Fed wants to do that. Maybe the Fed needs to do that in order to just destroy demand and prices go down. Maybe. But if that's the case, we'll see. But do I predict one in 2023? No, I don't. I think we're just in a drawdown at a point where we're at 2018 Fed. That was the same thing. President Trump was in the middle of a midterm election a year. Sound familiar? Midterms, guys, are generally weak, especially for a new transition party candidate. Again, Democrat Barack Obama to President Trump and President Trump to Biden. So in a re-election year, when they're re-elected and they have the midterm year, that's usually okay. But it's a new candidate midterm year. Seasonally speaking, it's pretty weak. Historically speaking, it's very weak. So again, we had this in 2018. We had this in 2011 and 2012. Remember, Barack Obama was right after his midterms. Again, you get this kind of, I hate to say the word, just gully, if you want to call it, or a kind of a hiccup. Big hiccup, obviously, but things do turn around as we go along. So if you're a trader, you're just taking advantage of this price swings like we did the last 2 days. Has Netflix hype peaked? I don't think it's peaked, because I think it's definitely ripe for an acquisition. So again, I would love that Apple bought Netflix. Who knows if that's the right price? But I think if you're buying Netflix, you're buying a turnaround story. Maybe they get some cash infusion or a new investor. Who knows? Remember, Bill Ackman tried. And then you also have an acquisition possible target. Apple could buy Netflix. Google could buy Netflix. Who knows? I didn't know that Elon Musk would ever buy Twitter. I mean, in this market, who the hell knows? And great analysis, Uncle Carlos. Thank you. Thank you so much. Carlos, do you think we get a bounce on Apple next? If you get a bounce in the S&P, you're going to get a bounce in Apple because it's the largest piece of the S&P. So again, where Apple goes, SPY usually runs with. And you can see we're kind of bouncing off that initial support of around 410.66. Let's see how we get at market open. But a hell of a day yesterday. I'm back, rested, ready to rock. It was a crazy day yesterday in a good way. Let's see if this head and shoulders pattern, possible head and shoulders pattern, let's see if this actually comes through. We could bounce 415.05 for upside, 406.43 for a break. That's your bottom or your candle bottom. But 410.54 is your temporary support. That's right here. Make sure to put your alerts as you go along. Need more coffee for today. William, I'm ready for anything, brother. I'm ready for anything. Let's rock and roll. Have a great rest of your day, guys. I'll catch you guys. Actually, no, I have to take Kevin to the airport today, so he's heading back home. He stayed with me for about a week at my place. It was great hanging with him. He's always fun to watch. I love hanging out with my team since we're all separated, working from home. But it is always very nice to see him. So no aftermarket recap today. I have to take him to the airport. So I will catch you guys later. Have a great rest of your morning. Have a great rest of your weekend. Don't forget, it is race weekend, F1. I love F1. There's some soccer this weekend, NBA playoffs. You got NHL playoffs. Tons of great stuff. I'll definitely be watching. And just want to give a big shout out to all the mothers out there and all you guys out there. Make sure to call your mothers. Say a happy Mother's Day to them. The world is a better place because we have amazing women in it. Happy Mother's Day to all. Thank you so much. We love you. We support you. Thank you for supporting us. I'd like to thank my mother for raising me and taking care of me, making me the man I am today. I'd like to give a special shout out to my amazing mother-in-law. She's like my second mother, super sweet, cooks the best pollo empanizado you'll ever have. But I don't want to say that too loud either because a lot of people will probably get on my ass. Have a great one and happy Mother's Day to the amazing women out there. Cheers.